you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite
Welcome
low.
back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in and we're going to go over all of the Zillow data. I am so sorry, you guys, but that's what people want to know about. What is Zillow forecasting now? And let's take a look at the November update from Zillow, because the thing is, guys, is basically everyone is flip-flopping once again and is now saying that prices are going to go down and they're going to go down fast. And that's not just Zillow. Redfin, the National Association of Realtors, even Bulls on YouTube. Everyone is now expecting prices to go down, probably because the PE ratio is 7.4, which is the biggest asset bubble in history. And the payment to income ratio is over 41%. That means that it is more unaffordable now in comparison to the 1980s. So about the same level of unaffordability, but that's based on gross income. We take home net income after taxes are taken out, and they're not even counting property taxes and insurance, which are blindsiding current homeowners. Once January hits of 2024, I'm telling you guys, you know, homeowners, whether they're investors, first-time home buyers, millennial, baby boomers, people that are speculating, those property tax bills are absolutely going to blow up in people's faces. Now, thank goodness, Texas just passed a law. I forgot to mention, remember, I am not a financial advisor, even though my bio is as someone that's trying to love these Maltese dogs, okay? I understand it's a prerequisite to be an investing millionaire and you got to love these little dogs. You know, guys, I'm trying, okay? It's just so cringy to me when a grown man has these little Maltese dogs, so I'm trying to do a better job. I brought Sunshine into the mix. This is our mascot logo, and I'm doing that because I want you guys to know that I have millionaire tendencies as well. That was a bit of an inside joke. Hopefully you got it, but regardless, you guys, we're going to jump into a Zillow article today that's titled simply Housing Market Report for November. Let's take a look at some of the bullet points that they have. And I'm going to be honest with you guys, I am not going to make fun of Zillow and how they've lost hundreds of millions of dollars on the property flipping. I'm not going to make fun of Zillow for backstabbing realtors and loan officers who supported them for the last decade. So I won't bring any of that up. What buyers should know about the market right now? Well, I would say if it's me, number one is what you should know about the market is Zillow is always wrong. We found multiple errors with their algorithm and reporting for their value called Zestimate. They themselves lost hundreds of millions of dollars because of how aggressive and inaccurate their estimate is. But anyways, here's the three things. Lower mortgage rates and cooling home values made a home purchase slightly more affordable in November. Cooling home values, not declining. Okay. Number two, price cuts are more common than normal. Chances are good that prices are negotiable. This is why the realtors lost the commission lawsuit. Everyone says negotiable, negotiable, negotiable. They've always been negotiable. It's just the system is set up to where they don't want you to negotiate as a buyer. They just want you to settle. And remember this, if you're down and out like, oh, I didn't buy in 2021 and 2020 and 2022 and oh my gosh, I'm a loser, blah, blah, blah. That's just a head game. Okay, your friends that are probably way less responsible that purchased houses got lucky. They got lucky. Remember what the house market was like in 2020, 2021. Bidding wars. Appraisal gaps, you guys. How did appraisal gaps become a household name? That's how dysfunctional. Fear of missing out, waiving contingencies, people purchasing online houses. If you missed out on that, it's a good thing. And we know that's a good thing because look at the buyer's remorse surveys. Buyer's remorse surveys spell it out. Don't listen to the bulls that are paid to push a narrative. Listen to the actual buyers of houses. What potential sellers should keep in mind? Competition for attractive listings is still hotter than normal in this low inventory environment, which if the rates go down, we will have a flood of inventory, which will rock prices. I can guarantee that. That's my opinion. I can guarantee you that's my opinion. But anyways, number two, mortgage rates are slowly easing down. Okay, guys, but buyers are still constrained by cost. Dropping your price to meet buyers where they're at is a common strategy, more so than typical at this time of year. Okay, so they're right. You know, home values rebounded this year, and if you have a house and you've been considering selling, it could still be a good time to sell. Unless, there's a huge unless here, you bought within the last year and a half. If you purchased within the last year and a half, odds are you have no equity and you have a super high mortgage rate. Don't forget, you guys, I would say maybe 8 to 11 million homeowners, especially the new homeowners, they're already upside down in their house. It usually takes about 8% to sell your house, 6% to realtors, and 2% for costs. So again, we have people upside down right now. Zillow goes on, home values, mortgage costs, tick down, tick down. That's a good thing. They're changing their narrative because people can't afford this crap no more. And we have hypersupply with new home construction, which is spreading on over to existing home sales. You see that in Texas happening. At least I see it in my own backyard. However, year-over-year growth in Zillow home value continues to climb, though that hides. Thank you for finally, my gosh, I don't have to say it. They finally said this themselves. So looking at year-over-year data, investors and bulls that are fools, okay, that don't look at the monthly, don't look at the monthly, because that hides what's going on with price trends. I'm really happy that they said that. With mortgage rates still 7% for prime borrowers in November, the monthly growth rate went more negative than is typical in November. And also those slime ball, bulls that are so aggressive that just say, it's just seasonality. They don't understand how real estate works. If people are saying that the prices went down for just seasonality, they don't understand. They don't understand, and they don't want to look at the data and compare what normal seasonality looks like. What we've had happen is not normal seasonality from any value standpoint. In fact, depending on the value and depending on the data set you're looking at, it's been 5 times stronger than normal seasonality. So all the people that say it's just seasonality, you kick rocks, man. Like, we got this. Few bullet points. Typical home value is worth $347 according to Zillow. Typical mortgage payment, assuming a 20% down payment, which is not average, by the way, it's actually about 18% depending on the month, is $1,927. That's up 9% from last year and 120% since pre-pandemic. Okay, that's a really important data point right there, would you say? Home values rose month over month in only 2 of the 50 largest metro areas. What? Only 2? So we had 48 that had a month over month decline. Intriguing, including Miami at 0.3, leading the way. Thank you, Miami, for finally showing up. My gosh, the migration and speculation has been horrible. But again, finally the softening. Las Vegas at 0.1. Now, the largest monthly drops were in New Orleans. Okay, and you guys know any realtors in New Orleans? I'm not going to go there, but 1.6% down. Number 2 is now Austin at 1.3. There's San Antonio. There's Texas. What I say about Texas, we have more housing inventory for new construction than any state. So nationally, it's going to go down in Texas. But that's down in San Antonio 1%, Minneapolis 1, and San Francisco 0.8. Now, looking at the year-over-year data, which remember, year-over-year data hides current price trends. So if anyone keeps, reciting the year-over-year data, just say kick rocks, we'll talk to you in a year. Home values are higher in the last year in 37 of the 50. So year-over-year, 37 of the 50. The highest is Hartford at 11.3, Milwaukee at 8.7. Surprising, Anaheim's not in there because it's probably not the largest metro. But San Diego at 7.6, Providence 7.4, and Boston 7.2. According to Zillow, inventory continues slow climb out of pandemic hole. Thank you, Jesus. I still lost my dollar bet. And you guys probably saw that montage. Johnny, I'm sorry, bro, but you are a legend. The dancing stays. New listings are 14.1% lower than pre-pandemic levels. Okay, that's it. So we just need 14% more inventory. Well, if rates go down, we're going to get way more than 14%. And then the metro areas that are heavy in Airbnb bans, also, we're going to get way more than that. New listings decreased by 20.5% month over month in November. That's a pretty sharp decrease right there. New listings in November were 3.1% higher than last year. So what that tells us is the seasonal declining inventory is at play here, but it's not as strong because of the unaffordability. Total inventory in November decreased by 5.3% from October and was 2% lower than last year. So obviously we're making progress. Inventory levels were 37.2% lower than pre-pandemic levels this time of year. So again, when rates go down, I suspect we'll have 1.5 to 2 million sellers right now that are salivating. They're just waiting, rates, please go down rates so I can sell my house and finish my divorce. There's a bunch of people like that right now. Let's keep going. Price cuts are still abnormally common as sellers respond to high interest rates. Price cuts for November were sitting at 22.6% of listings. That is down 2.5% month over month. Okay, so still crazy. Price cuts fell 1.6% from last year. The interesting thing is Redfin has it at a historical high, actually. So Redfin and Zillow are different. Sales are down, but homes that sell are moving quickly. Okay, interesting. Here's something that we should all be watching a lot. The rental market. Lots weighing on that rental market, guys. Rents fell in line with seasonal norms. Asking rent across the U.S. ticked down in November at roughly the level we expect to see this time of year. The typical U.S. rent is $1982. U.S. rents decreased by 0.2% month over month in November. The pre-pandemic average change for this time of year was -1. So we doubled it. Rents are now up year over year. Again, so we can hide what's going on right now. They're up 3.3%. You guys, when I see that rents were up 3.3% from last year, it just really makes me think of, these people on YouTube. I'm not going to use any names. I remember this one guy, he's a loan officer on YouTube, and this guy is a huge fear monger. Okay. But like the FOMO, right? The fear of missing out. He said, you better buy now because rents are going to go up 15% this year. And he said that like mid-year. Like we already saw rent going down and he's still telling people, no, it's going to go up 15%. I mean, think of the lack of accountability from professionals. It's absolutely disgusting. And honestly, the violations from the CFPB on this guy's channel is just so mind-blowing to me. But anyways, I'll just move on. Rents fell on a monthly basis in 32 of the major metro areas. The largest drop was in Raleigh at 0.9%, San Jose at 0.8%, San Fran at 0.8% as well. San Diego? 0.8, and Austin 0.7. Now, rents are up from a year ago in almost every metro area. Again, year over year, 47 of the 50. Biggest increases have been Providence at 7.3. So even the biggest increase is 7.3. So this wacko that is convincing people that rent's going to go up 15% this year, even the top metro area is half the 15%. These guys need to be locked up. Now, here's some charts. If you guys want to come here, this is really cool. This is the home value, and you can really select your metro if you really want to see what's going on. Now, if I select Austin, you can see Austin, you guys, is down over 100,000. So Austin peaked, according to Zillow, okay, in June of 2022 at 562. Okay, that's all the way down to 453. So that's down about $110,000 in Austin. And you guys see that little bounce back right there? That's all it made. You can also go up to these tabs right here and look at new listings and inventory and price cuts. Now, when we look at the inventory in Austin, I mean, there's more inventory in Austin than there was pre-pandemic. You see that? And that's why Austin is the #1 declining metro area, because they now have more active inventory than they've had since pre-pandemic. So again, before recession, okay, before job loss, Austin's down big time. Primary reason? Obviously, equity run up and unaffordability, but the migration out, okay? They're not getting that migration in anymore. And most importantly, the supply is where we were at pre-pandemic. You guys, we're only off 500,000 active listings. That's it. And there's 1.5 to 2 million sellers that are sidelined right now. So when we get that inventory back, you guys, what do you think is going to happen? So what does all of this mean? To me, what it means is prepare now. Okay, you want to prepare before you're swept into any type of recession. What do I mean by prepare? I would say, well, the first thing is understand how local trends work, going as far as understanding the subdivision where you want to purchase it. Look at how values are working there. Increase your purchasing power by increasing your credit, your income, and your assets. Be patient. I'm taking my down payment and I put it in T-bills. I'm getting 5% back annually. I've rearranged my budget. I'm using credit cards that give me cash back. And the biggest thing is I'm paying the credit card off before it bills. If you're doing things like that, then you get paid to wait. I'm getting paid hundreds of dollars a month to wait to buy a house. And I think that's a great idea for, to be honest, 99% of America. What do you think about Zillow flip-flopping? And think of how aggressive they were, right? They're like, yeah, it's going to end this year strong. It's going to end this year strong. You guys, everyone is flipping. Everyone is flipping, and it's about time. Now, if you're out there investing in real estate, you already know I wish you luck, and I hope you win.